Now, with this new anti-flipping rule, any house that's held for less than 365 days in a calendar year, it will automatically be presumed to be business income.
Welcome to Real Stories in Real Estate with your host, Denise Laframboise. Real people sharing real stories about their adventures in real estate.
Welcome to the Real Stories in Real Estate podcast. I'm your host, Denise Laframboise, and today I have Brady with me. So welcome, Brady.
Thank you, Denise, for having me.
So we're going to talk about a super exciting topic today, which is the anti-flipping rules.
Oh, yes. Well, maybe not so exciting, but we'll see what happens. I'll try to keep some tax law interesting here for everybody.
Right. So for people who don't know you, you are a tax lawyer.
Yes, at Birch Law. It's in Oshawa at 19 Salina Street.
And we're going to talk about some really big changes that are happening in the real estate world with respect to tax law. So maybe to start off, if you could just explain a bit about what the anti-flipping rule is and kind of where it came from.
Yeah. So the government in their 2022 proposals kind of for the budget has made it a big point that they really wanted to stop house flipping because they kind of think it's creating an unfair advantage, it's raising house prices, and the people aren't paying their fair share. So generally, as we all know, when you sell a house, even if it's generally for a short period of time, if it's your principal residence, it's usually taxed as a capital gain, meaning only half is actually taxed and the other half you get for free.
If it's not your primary residence. Right? Your primary residence is usually exempt for most cases?
So the primary residence would be exempt, but if it's not, so say you invest in a property, it's a rental, then you sell it, that's generally considered a capital gain. So you're only paying half.
Right, of your tax date. This is why we sold rental properties when I was on mat leave and my tax rate was lower, right? So it's based on your tax rate, right?
So say you have $100,000 gain, you're taxed on half of that, which would be 50%, and then that 50% is taxed at your normal rate. Once you put that into your return, it's put into your income tax.
Awesome. Okay, and I get it that it is creating a bit of an unfair situation. If we have this short supply and we don't have enough houses for everybody, and then you have buyers who want to buy at that price point to live in it, and you have flippers having an unfair advantage to potentially be able to bid a lot higher, right?
Yeah. So part of this whole new anti-flipping rule is before it was kind of the CRA had to catch it and say, hey, you know what? This is actually business income. This is a concern in the adventure in the nature of trade. So essentially, this is a business you're running, to put it very simply. And it would be up to the taxpayer to kind of put an onus to prove that, no, this is actually a capital investment. This is not my business. Now, with this new anti-flipping rule, any house that's held for less than 365 days in a calendar year, it will automatically be presumed to be business income. And this is their way to stop this flipping.
Yeah. And I mean, even though it does affect flippers, let's say you still find a good property to flip, I don't think this necessarily is going to stop it. It just might mean that you have to make sure that you're including another line item for this extra expensive tax cost to make sure that it's actually a profitable adventure for you.
Well, and I think before when people were flipping, right, is obviously for a capital gain, you're not really writing off a lot of expenses, whereas this you'd want to have a lot more detailed expenses because it will come off that business income, right? So just keeping in mind that, keeping your expenses on track.
Yeah. And I mean, it makes sense, right? If we're looking at whether it's a rental property or flip or whatever, we are always encouraging our clients to look at it as a business adventure, right?
Yeah.
What are our line items? What are our expenses? What is our potential profit? Because we will often hear people say, oh, I bought this for this much and I made this much money. And it's but what about what were your tax costs? What were your expenses? What was the opportunity cost of the money that you had to invest into that project, right?
No, for sure.
It matters. And so with any rules, there's exceptions to every rule. And I think the list is quite long with this one, right?
Yeah. So always with tax law, there's always the general rule, and then we have our list of exceptions. So for most people, I think, I wouldn't be too concerned. There is quite a big, long list of normal stuff. So kind of what they have here is, obviously the death of, a spouse or the taxpayer, if you're having to sell and go to an estate sale, this rule probably wouldn't come into effect because there's a reason for it, right? There's the death of your family member. And why would we hold property longer, especially if there's capital gains on the estate you have to pay? So they kind of recognize that as one thing. If there's a serious illness or disability between you or your spouse who are holding the house, they're not going to tax you on the full business income on that, right? Then we have, birth of a child. If you have a job loss or need a job relocation, if there's a divorce, which you have to be separated for at least 90 days before you try to claim the divorce for this exemption. If you have an insolvency, if there's a threat to your personal safety, or if the property comes under like destruction.
Okay, so that's a big list, but it's a reasonable list, right? If I buy, say, a pre-built property and it's got, it's a small condo, and then I actually have a baby and I don't fit in the condo anymore, it's reasonable to assume that this wouldn't fall under that.
Well, and that's definitely an argument, right? Like it's the birth of a child. And I think, again, in that situation, you can kind of tell because the whole kind of purpose is, right, they want to capture people who are doing this for business, right? If you're moving out because there's a new baby and it doesn't fit, that is not signaling an intention to run a business, right? And I think that's kind of the whole crux of this, right? Is like, why is it that you're actually flipping this property?
And do you really think there's that many people out there like making so much money flipping houses that, I know Home and Garden Television thinks that there is, but I don't know. With that list of exceptions, I can think of a lot of clients who could get out of it.
That's what, and I think too, like I said, I think for a large majority of people, it might not be an issue. It's going to be a little bit annoying. And this is why you need to speak with probably a lawyer when this comes up, is because now the default position is it's business income and you have to go now and prove that one of these exemptions apply, right?
And I suppose as you go through this, you'll have standard ways to prove it. Like through your experience and working in your practice, you'll be like, okay, these are the things that we give them. And they say, okay, that makes sense.
Well, yeah. If you have a divorce, right, there might take a little more evidence to kind of prove, 90 days, that might be a little more scrutinized. But if there's something like a death, that's very easy to prove, with a death certificate. If you have illness, doctor's reports, medical reports, stuff like that. So there's all evidence-based stuff for a lot of this that would be easy to kind of prove.
Or the opposite piece, right? If you're not going to fall into that exception, I think it's important to talk to an accountant and a tax lawyer to figure out, okay, how much is this actually going to cost you? Yeah. Or is there something that could mitigate that? An example, so if I buy a rental property, I'm self-employed, my husband is not. So what if the title is 99% in my name and 1% in his name? How is it capital gains tax then?
Yeah, no, for sure. Yeah, no, those are definitely all things to consider, but
yeah, so I think having that consultation before you're taking on any of these adventures of buying a rental property, buying a home to flip, even buying a pre-built condo that you may not know what's going to happen when that's actually built, right? We're finding even a lot of builders that have relatively been on time are now delaying and pushing out. So sometimes you think you're getting that condo in 3 years and maybe it's 4 or 5. Life can change a lot in that time frame.
Oh, for sure. And I think too, what I would also like to say to people is I'm obviously talking from just a tax perspective, right? When it goes into a big purchase of a house or anything like that, or deciding whether to sell, you really do need a team of people because tax only is one consideration. Speaking with someone like Denise, who can give you advice on a mortgage, that kind of side, or financial advisors that we speak to, whether it's proper to sell or not. But is it really a team effort, especially with this complicated stuff?
Yeah. And so this is stuff you live and breathe all day, every day, right? So fun, complicated tax law, right?
Yes. People think I'm crazy, even lawyers. So
what kind of typical clients do you deal with on the average week?
On the average week, I'm getting a lot of consults for especially assignment sales lately too, because there is no new rules that are introduced on that, where even assignment sales now are the HST is no matter what, you have to pay HST. And then it goes back to that whole issue of whether it's business income or capital gains as well too.
And for people who listening who do not know what an assignment sale is, it's essentially like I buy a property from the builder that I'm going to get in 5 years. And instead of closing on it, I sell it to Brady for like, I'm selling him the rights to buy that property on a piece of paper before it actually closes. There's a lot of people who do this either because they need that money out, because there's been unforeseen delays, because like they're no longer in a position to close on it, or previous to this environment, sometimes this was a way to make quite a bit of money.
Yeah, no. And again, that was another thing in this new proposed legislation. And this was another way to help with the unaffordable housing. And this is another measure that the government has felt that this is a way to do this, is to tax these assignment sales with HST. Whether we agree with it or not, I guess that's a discussion for a different time and place, but
yeah, well, and I do think there's people who like, fit into those exceptions you listed where like they bought something and then life has changed. But there are definitely people out there that were buying these types of properties on speculation, hoping that they could make a lot of money. And in some cases that's worked out really well. In other cases, not so much. It kind of just depends on the market and what the average costs are for things, right?
Well, I guess bringing up that point, for the situations that don't go well is on these new anti-flipping rules too. If it's considered this flipped property where held it for less than 365 days and they think it's for a profit purpose, then the capital loss, if you lose money on it, you cannot claim that capital loss either. So they've really tried to discourage the flipping with this, right?
That's interesting. Yeah, because if you have like a business that's losing money, at least that helps you, but not in this example, right?
No, not for flipped property. The capital loss will not be written off. Now, we'll see how this goes in terms of like January 1st, 2023, what the actual final kind of piece of legislation is. These are all kind of proposals right now, but that's kind of the idea we're getting here, right? This is kind of what the idea is, and this is what's kind of going to happen. And we're kind of all preparing for this, being like, okay, maybe rethink selling within the year, unless it falls under these exceptions, and speak with someone who's knowledgeable in this area, determine what's the best course of action for you.
Yeah, and we do have, like, I have had my fair share of people come to us and say, we bought this house and we can't sell it for a year. And you're like, no, that's not how this works. Like, you actually need to speak to somebody, because if you fit into one of those exceptions, if it's, a primary residence, like different reasons, potentially it doesn't impact you.
Yeah, and I think too, like, especially if you want to challenge something with the CRA, it's not just you go right to court and have to pay a lot of money, right? There's a process. You can send off a letter initially outlining your position and kind of negotiate. If they don't like it, you could do a notice of objection. It's only if you get past that notice of objection stage and they don't agree with you, then you take it to court, right? Sometimes a simple letter from a lawyer outlining the position with the proof is more than enough for them to just be like, okay, we'll reassess, right?
And I love how, like, me as like a lay person who does not deal with CRA all the time is like, I'm terrified of those brown letters that come in the mail. And you're like, no, it's just a simple letter. I just like, this is why we have you in our lives, so that we can just be like, hi, they're calling us. Can you help?
And you'd be surprised how quickly a letter from a lawyer can kind of stop things in its track.
That's make it feel like a big deal. And when you're like, look how much they care about stuff from me.
Oh my God. I mean, when they do what I want, yes.
So typically you're dealing with, you said assignment sales, you're also dealing with people who owe a lot of money to CRA, right? Helping them out of those situations.
Well, it could depend what it is, right? Like, again, the flipping, I've had a lot of people start to come in and ask me like, oh, should I flip this house? Is this actually business income? Stuff like that. A lot of people coming in asking, is this a reasonable expense? Like, speaking with that, like, that's a big one in tax season, right? Is the CR being like, well, no, you can't write this off. oh, this was too much. So it's kind of negotiating on that front too, being like, no, this is the law. It was a legitimate business expense. It wasn't over the top.
Yeah. And knowing what's reasonable, right?
Yeah.
Which we don't know. I know what my expenses are, but I don't know if it's reasonable to attribute them all to my business, right? The same way that you or a knowledgeable accountant would, right?
Well, there's kind of two parts to that, right? There's the actual like character of the expense, and then there's like the amount of it, right? So both of those you have to look at whether it's reasonable, right? But when you're running a business, as long as it's not really too crazy, like if you're spending, $100,000 on advertising and you're bringing in 5,000 a year, then it's kind of okay, like
fair. And I also find it interesting when people like say they're behind on their taxes. A lot of the times they're behind on their HST, or they're behind, like they didn't, and then they go to catch up, and then they have these big CRA bills, right? Like a lawyer like yourself can help with that as well, right?
So
make the pain more bearable.
Well, in that situation, it's a taxpayer relief application, right? And I don't know if a lot of people know about this, but there are certain circumstances where you rack up a lot of tax and there's some personal issues in your life where you can't pay it. Now, I don't think it's a very highly promoted program under the CRA, but exactly what I was kind of talking about before, right? Where, say there's like a natural disaster. That is a thing. If there's financial hardship, that's another one that people don't know about. You can go and apply, use these taxpayer relief applications and potentially get some interest and penalties eliminated, right?
Awesome. Well, if people have super fun tax questions, corporate tax questions, where do they find you again?
You can contact me at birchlaw.ca. And
Awesome.
all of our information is there. We also do some real estate law, wills, and corporate as well.
Thank you so much for joining me today. And I really appreciate you sharing this and sharing your knowledge with us.
Thank you for having me, Denise.
This was the Real Stories in Real Estate podcast. You can find it anywhere you consume your podcasts, on iHeartRadio, Spotify, Amazon, or anywhere else. Thanks so much.